Okay, so we look at cash production combos now. So they'll be labelled as cash budgets, but they're actually more they're closer in line to the production budgets that we've done. Pr- Probably there's not as many of them in the past, or a fairly recent sort of an add-in. But they're really straightforward. You know, they're easy enough to get a handle on. Now, if you don't put a bit of practice into them, you won't have a notion what's going on. So I'd suggest once you've looked at this, maybe at least once a fortnight between now and your leaving cert, that you give each of these types of budgets a go. Anyway, so let's look what we've got. So we're told that it's a brand new business. You're told what the sales are going to be. Um, and then you're told a load of stuff about the production of the product. So you need 3 kilos of material X, which costs €4 per kilo, and so on. Stocks are going to be 60% of the following month's sales, and so on. All right. You're given the cash collection pattern, like you would be for a cash budget. You're given the cost pattern, like it would be for a production budget, and then you're going to be asked a load of little questions, rather than one big cash budget. A little bit like your production budgets. So let me we'll get it started. So prepare production budget for the 4 months, July to October. Now we've got July to October. Now you'll see I also have November in here. You're going to need November to work out a load of sort of areas of the thing. There won't necessarily be marks going for November, but you're going to need to work out November. Anyway, you're asked to do a production budget. If you remember from production budgets, it's to find out how many we're making in units. Um, so it's going to be sales in units, and if you remember, it's sales less opening stock and add closing stock. That's always the order for a production budget. You're taking away your opening stock and you're adding on your closing stock. You obviously don't need to make your opening stock. You do need to make your closing stock, and that will give you your units to be produced. Unless it tells you to do it in units and euros, we're only doing it in units. So our sales in units are €9,000. The second month they're 9,750. September they're 11,000. October they're 12,000, and November they're 12,000. Now I do need December, but I'm only going to use it to find out a figure for my closing stock, so I won't write it in. We do need November. We need to know the answer for November for a later part of our question. Okay, so we're taking away the opening stock. So it's a new business, so it doesn't have any opening stock for the first month, but it does have a closing stock. Okay, and the closing stock is 60% of the following month's sales requirements. So our closing stock is going to be 60% of August sales. Alright, so we'll find that 0.6 of August sales, 9750, and that's 5850. So that'll give you 9,000 minus 0 plus 5850, which is 14,850. So that's how many we need to produce in July. Now your closing stock for July becomes your opening stock for August. So it's going to be 5850. Remember, it's a minus now because you don't need to make your opening stock. So your closing stock each month is 60% of next month's sales. So the closing stock for August is 60% of 11,000, which is 6,600. You could, if you wanted, do all the closing stocks first. I won't. So then it's sales minus opening stock plus closing stock is 10,500. Okay. Now next up then, the closing stock for August becomes your opening stock for September. And then your closing stock is 60% of October's sales, so 60% of 12,000. So again, sales minus opening stock plus closing stock is 11,600. That's 7,200 closing stock becomes your opening stock, and then it's for October it's 60% of the 12,000, which is 7,200. Have I made a mistake there? So that should be 12,500. So it's 60% of 12,500, which is 7,500. Okay, so finish that out. You get 12,300 there. Now this 7,500 comes up here, and this is where you need your December for. Your closing stock is 60% of December, so 60% of the 12,800. Which is the 12,680. Okay. So that's our production budget done. The second thing we're asked to do is a raw materials production budget. So prepare raw materials production budget in units and euros. Now we're going to use the same month, so it's July as far as November. Now you do really need to write it out each time. They're all separate questions, so you should write them out each time. Now, we start off, how many units are we going to produce? So we're trying to find out how much materials we're going to need. So if we're trying to work out how much materials we're going to need, we need to know how much units we're going to produce. So we take our answers 14, 850, keep going across, so 10,500, 11,600, 12,300 and 12,680. Now, if we're working out how much materials we need to see how many materials go into the products. Now it's only ever one material, so in the production budgets you have your two materials. In these ones you've only one, so it says each product requires 3 kilos of material X. So materials per unit will be 3. So obviously the total required for production will be 3 multiplied by each of the units to be produced. So 14,850 by 3, 10,500 by 3, 11,600 by 3, 12,300 by 3 and 12,680 by 3. Okay, so that gives you your units to be produced. Now again, just like with the production budget, it's less opening stock and add closing stock. So again, we said this is a new business, so your opening stock initially is 0, and then your closing stock will be a percentage of the next month. So stocks of raw materials sufficient to cover 20% of the following month's requirements. So we require 31,500. So 20% is your 6,300. Okay, so that's 6,300 will come up here as a minus, and so it continues. Now I'll just find my final answer here for this one. Okay, so 6,300 for August. It's going to be 20% of 34,800, which is 6,960, which will bring up here. Then for September, It's 20% of 36,900, which is 7,390. And then for October, it's 20% of November's 38,040, which is not that. Which should be 7,608. Okay, so again, it's total needed minus opening stock plus closing stock. So 31.5 minus 6.3 plus 6,960. 34.8 minus 6,960 plus 7,380. 36.9 minus 7,390 plus 7,608. Now we don't need November anymore. You can stop at that point. Okay, but November you're only using that to work out your closing stock of raw materials. Now you're asked to do it in units. So this is your required for purchases, and then you have to multiply by your purchase price. So the price is €4 per kg. So €4, so we'll put in 4 here. And then your purchases in euros will be your required multiplied by your price. So 50,850 by 4, 32,160 by 4, 35,220 by 4, 37,118 by 4. Okay. So that's the production element done. The next part is to prepare a cash budget, and it's for 4 months, July to October again. So we'll go July, August, September and October. And we're asked to do our purchases, our cash budget. Now, our cash budget is done identically to our cash budgets from just the full cash budget. So you're looking at your cash position, so your receipts and your payments. So let's look at our receipts first. So the cash collection pattern from sales is 30% will be for immediate cash, 70% will be from creditors. These debtors will pay their bills 50% of the month after sale and the remainder the second month after sale. So there's no discounts to worry about. So we've got cash sales, and it's 30%. Then we've credit sales, which is 70%, so half of 70% is 35%, and the remainder will also be 35%. So because there's no discount, that should add up to 100. Now again, it says 70% here, 50% of the month after sale. It's not 50% and 20%, it's 50% of 70%, which is 35%. So we look at our sales, right? So our sales is 270. So we find 30% of that. We can find 30% of 292,500. We'll find 30% of 330 and 30% of 360. Okay, now credit for 1 month, new business, so you're not collecting anything in July. If it was an existing business, there might be debtors to collect from, but there's not. So then we still start with this 270 and we find 35% now. So 35% of 270, 35% of 292, and 35% of 330. Okay, and then we go 2 months across for the 2 months, and it'll be the same numbers, 9450, and I'm sure that 94500, I've left a 0 out there. So 94500 and 102375. So our total receipts will be the three of those added together. Okay. So, then you move on to your payments. There's not a huge amount of work to do with this. So, it tells us it says 1 month's credit is received from suppliers. So we pay for our purchases 1 month after. Now, we don't have to work out what our payments are because we work them out in Part B. So we know for July we're buying 203,400, so therefore we're paying it in August. In August it's 128,640, that one there, which we will pay in September. And then we've 140,880 in September, which we will pay in October. Okay. So that's our purchases done. Wages tells us it's 10,000 plus 5% of sales revenue per month payable as incurred. Alright, so it's going to be for each month you have to find 5% of sales and add it to 10,000. So we'll find 5% of the sales revenue. So the sales revenue is 270, and then we're going to add on to that 10,000. So that's 23,500. So for the second one, it's 5% of 2925. And then add on 10,000 for wages. So for the third one, 5% of 330 and add on 10,000. The fourth one, 5% of 360 and then add on 10,000. So 10,000 wages and then adding on your commission on top of it. Okay, so that would be new that year, but that should have been straightforward enough to work out. Okay, variable overheads, 4 euros per unit payable as incurred. This one should be really easy. It's going to be 4 euros per unit. So it gives you the units here. So 4 by 9. Sorry, it's not these units here. It's the units we produce, isn't it? So it's variable overheads 4 euros per unit payable as incurred. So your variable overhead will be 14,850 multiplied by 4. Okay, so just don't get caught the way I nearly got caught there. It's your units to be produced multiplied by 4, because you pay, this is the amount you're making, therefore if your variable overhead is per unit, it's going to be by the amount you pay, which is different to the cash budgets, where the variable overhead is based on your sales units. In these ones here, it's based on your the units you make. So the next one is 10,500 by 4, then 11,600 by 4, and 12,300 by 4. Okay. Fixed overhead including depreciation 28,000 a month. So that's going to be 28,000 minus whatever the depreciation is. So equipment purchased on the 1st of July has a useful life of 5 years. So just the depreciation So the equipment is 60,000. If it's got a useful life of 5 years, it's going to be in effect 60 months. So if you divide it by 5, it'll get you the depreciation a year, which is 12,000, and divide that by 12, you get your depreciation a month, which is 1,000. So instead of paying a fixed amount of 28,000, we're paying a fixed amount of 27,000. We're going to take away that 1,000 away. So 27,000 each month. Okay. Now, generally, just like with your normal cash budget, you've got a loan. So you'll have a loan repayment and a loan interest. Now, you may not have a loan repayment. It could be that you're paying it off all on one lump sum. But you will always have loan interest. So you just have to read it. So to finance the purchase, a loan of 48,000 will be secured at 10% per annum. The loan and interest will be repaid over 4 years. Monthly capital and interest repayments will begin in August. So you're paying it back over 4 years. So 48,000 paid back over 4 years means you're paying 48,000. Again, follow the same process. 48,000 divided by 4 means you're paying back 12,000 a year. 12,000 divided by 12, you're paying back 1,000 capital per month. So you're paying back nothing in July. You're paying back 1,000 in August, 1,000 and 1,000. So the loan interest then, for the first month, it'll be 10% of the 48,000. Divide it by 12. So 1 month's interest will be divided by 12, so that's 400. The second one, it'll be 10% of 47,000 divided by 12, which is just check that. It should reduce now. So it's going to reduce by €8.33 a month. Now, I'm not going to reduce by €8.33 a month, because that's bloody ridiculous. So that'll make it very, very difficult. Now, I would think there's probably, I'd say they probably made a slight mistake in that. So I would say they didn't mean to leave it at that, so I'm going to just check the marking scheme while I'm doing this, and they have left it at 400 each month. Now, there's nothing in the first month anyway, so it's 400, 400 and 400. Okay. Now, normally what that would be a nice easy number. It would be reducing by 10 or 20 quid a month or whatever, and it would go down by that. I'd say when they made this question, they made a slight mess of it. I'll read the marking scheme at the end and see what they're saying. But when you make repayments, you don't have to pay interest on the full amount each year. Although it's worded slightly differently. It says the loan and interest will be repaid over 4 years. So it's a different type of loan, perhaps. So maybe what they're saying there is that the total loan interest will be 4,800 a year, by 4 years. So that'll be 60, whatever that be. So 4,800 by 4, so that would be 19,200 in interest, and you're going to repay that over 4 years. So 19,200 divided by 48 will give you your 400 a month. So it's not a reducing balance loan. Now, I hadn't seen that before, but I'm assuming that's why they're saying the loan and interest will be repaid over 4 years. So we'll go with that anyway, because that's what how the marking scheme is. There was only, interestingly enough, there was only a mark going for the first 400 here. So I'm looking at the marking scheme as I'm doing this now, because I was trying to see where that came from. So in the marking scheme, there's a mark going for this 400, and there's nothing going for the other ones, which means that everybody had a reducing balance method and took away the 833. And it also says in the marking scheme to give the marks based on the candidate's numbers. So where people have gone wrong, you were getting the marks anyway. So that's where that came from. Anyway, back to the question. Your total payments. So I still would have gotten a H1, despite my mistake. The way I will always get a H1. Okay. So your net cash then. Your net cash is your total receipts minus your total payments. So 81,000 minus 109,900. 182,250 minus 298,425. 295,875 minus 229,940. And 325,875 minus 246,480. So then you've got your loan and your opening cash equals your closing cash. I'll just get rid of these. So you got your loan in the first month in July. So the loan was 48,000. So that goes in. New business, so it'll have no opening cash. So then net cash plus loan plus opening cash is closing cash. So how am I going wrong here? I never put in the bloody equipment. Apologies. Sorry. I'm no longer getting a H1. I left out the equipment. Just going to put it in there. So the equipment that we bought cost 60,000. So that's a bit more like it now. Anyway, the closing cash for the first month becomes the opening cash for the second month. So then it's 116,175. Take away the 4,900 gives you minus 157,075. Then 65,935 plus 157,075 is 91,140 minus 91,140. And then 79,395 minus the 91,140 is minus 11,745. So you end up with a closing cash balance of minus 11,745. So that's part D done. Obviously, I made one mistake in that as we went along. That's probably the longest part of the question, and it seems to be the most marks for it. Now, the second part for these, you've got to do a trading profit and loss account, or the last part, sorry. Now, unlike with the other ones, the other cash budgets, these have a traditional structure of sales, less cost of sales, which is made up of opening stock, plus purchases, less closing stock. And then you'll have your add gains, less expenses. There's going to be no gains in this anyway, so we'll see that in a second. So you're asked to produce a trading profit and loss account for the 4 months, right? So these are 4 months, July to October. Your sales are from here. It doesn't matter when you collected the money. So you add up your 4 months. So 270 plus 2925 plus 330 is 892,500 plus 360. Sorry, I've left out a month there. It's 125,500. Now, it's your opening stock, right? There is no opening stock. It's a new business. If it was, there'd be a value of your opening stock. Okay, your purchases. Your purchases is your four purchases figures. Where am I? Your four purchases figures. Which is these four here added together. Sorry, I just lost my marking scheme for a second. So it's 203,400 plus 128,640 plus 148,80 plus 148,472. So these four numbers added together make up your purchases. Okay, so that's 621,392. Now, which is slightly different than what's in the marking scheme. So they have a different number here for the marking scheme. And they have this number slightly different, so let me just see why that is. 369,7608. Sorry, I took a wrong number here. This should have been 7380. So down to probably H3 at this stage. So anyway, 621432. Now your closing stock. We have two stocks. We have stocks of raw materials and stocks of finished goods. So you've closing stock of raw materials and closing stock of finished goods. So finished goods, back up here, in October we've 7,500 finished goods. So we just have to give them a value. So we're selling our products the cost of our products is €20. Okay. So that's given to you in the question there. Okay. So it has to give you the cost of finished goods, otherwise you'd be at it all day. You'd have to go through all of the you'd have to work out the cost of 1 unit of finished good. They're not going to ask you to do that. Okay, so that's 150,000. The raw materials then, we can look all the way back up here, and our closing stock of raw materials is 7608. Okay, so the raw materials will be 7608. Now they do give us the price of 1 unit of 1 kilo of raw materials. It's €4. Okay, €4 per kilo. So we're going to multiply those by 4. Okay, so let me just turn those into minuses there, just to. So then it's opening stock plus purchases minus the two closing stocks gives you your cost of sales. And then your gross profit, as normal, sales minus cost of sales. Alright, so just again, be aware there with those that your opening stock will be 0 because it's a new business. Your purchases is your answer from Part B, the four of them added together. Your closing stocks are your closing stock from Part A, 7608. 7608 from Part B here. That's your closing stock, and then your price is given, and then your closing stock of your purchases is the 7,500 from for your finished goods is 7,500 by the purchase price of 20, 7,608 for your raw materials by the purchase price of 4. Okay, so then you've still got your expenses, right? So you've got your wages. Now your wages are your 4 wages added together, so 23,500 plus 24,625 plus 26,500 plus 28,000. So that's 102,625. Then you have your variable overheads. Now, €4 per unit, so you can multiply 4 by the sum of those 4 numbers there, or just add your 4 variable overheads together. So you can just add these 4 here. You can add your fixed overhead then. 27,000 by 4. You can add your depreciation, which is 1,000 a month by 4. So there's your depreciation there by 4, and then you've got your interest is your last one. Obviously, you always have to show interest separately in accounting, so we'll take those expenses away, and then we'll take away our interest. The interest was 400, 400 and 400, 1,200 there, which we'll take away. And that gives you your final answer, your net profit of 498,675. Okay. Okay. So I just wanted to change a few signs there to make it more understandable. Alright, obviously a couple of tricky little parts in that whole question, just beware of. I think they're straightforward. I obviously made a couple of mistakes along the way there, again just trying to rush through it a bit maybe, so take your time with it, work through it. You have a lot more time than you think, so and again you need to sort of keep on top of these, that if you don't practice them, and maybe practice them with a marking scheme in front of you for a while, you can make some horrendous mistakes when you get into the real thing. These could be important for you a bit later on in the year. Alright, we'll see you next week. Good luck.